The bulls will feel good on this Thursday that they at least got some green and the broader markets did outperform. So the session goes to the bulls after a while. Well, on that note, though, we'll wrap up on this edition of Closing Bell. You stay with us. Markets Forward comes up next.
"26 years of CNBC TV18.
Markets snap a three-day losing streak with all major indices ending in the green. Nifty reclaims the 25,900 mark, supported by gains in nearly 40 of its constituents. Mid-caps outperformed the broader market.
Rupee hits yet another record low against the US dollar. The decline catches money markets by surprise as the dollar index is also weakening. Uncertainty over a trade deal between India and US weighs on sentiment.
Indigo lowers its Q3 guidance following the spate of flight cancellations in December. The airline announces a travel voucher worth 10,000 rupees for passengers who were left stranded across airports on the 3rd, 4th and 5th of December. This is over and above the government-mandated compensation.
"26 years of CNBC TV18.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to prep you up for the next trading day. I'm Reema Tendulkar. With me is Ekta. And Ekta, finally a good session on Dalal Street, right? We were struggling for the last 3 trading sessions. And today there was this bounce back and the Nifty pretty much closed at the day's high.
Hi, Reema. Yes, absolutely. You know, just about at those 25,900 odd levels for the Nifty. That's where we closed. And the broader markets did better. We had the mid-cap index, which was up 1%. We had an advanced decline ratio, which was in the positive. So all of that, let's see whether it sustains, considering that we do have the shadow of the rupee, which has depreciated to another record low in today's trading session. But let's anyway tell you what we have lined up for you in the show today. We'll start with the top movers and shakers of the day with Hormuz. We do have equity inflows, which remain steady in November. However, large caps have remained subdued. A boost to CDMO names as the US Biosecure Act is set to become a law. And S&P has downgraded Ola Electric's parent on default concerns. Last but not least, we delve into the key market events to watch out for in tomorrow's trading session. But on to our first segment of the day, as always. Hormuz joins in from the big wall with all of the top movers and shakers of the day. Hormuz, over to you.
Well, finally, a good day, as you mentioned. We've been struggling for a bit, especially in the broader markets. And all of those names that were smashed over the last 5 to 6 sessions staged a bit of a rebound today. And the EMS names were one of them. Dixon recovered half of its losses from yesterday. Keynes, of course, was up around 4%. It's a bit of an unconvincing move because of the volatility that you saw through the day. And some gains coming in for PG Electroplast as well. Now, what was also staging a rebound were the mid-cap IT names that staged a bit of a downfall yesterday, but Persistent, Coforge, Oracle and Emphasis all did fairly okay for themselves, gains of anywhere between 1.5% to 3%. Not any significant boost, but not a significant downfall either. Now, the other stocks that did well in today's session were the capital market names. We had mentioned this yesterday that the fall in these capital market names was not on very significant volumes, so the chances of a rebound were higher. And there it is, Angel One, BSC ending at the highest point of the day, as was CDSL, gains of anywhere between 3 to 5%. Among the news, the railway stocks did fairly okay as well in today's session. Ircon was up 5.5%. No significant announcements that were related to railway names, but Ircon did well. Railtel was slightly off the highs of the day, but still ended 4% higher. And Jupiter Wagons too, from a 52-week low, staging a bit of a rebound. And lastly, some newsmakers today. Shakti Pumps was up 14% after an order win. And not just Shakti Pumps, a lot of these pump stocks have received orders today. GK Energy being one of them, Oswal Pumps being the other. Ola Electric, promoter getting a downgrade from S&P, but the stock, after falling 80% from its post-listing high, staged a bit of a rebound today. And Uptown, after cancelling its preference issue, is down now 20% in the last 2 trading sessions. Back to you guys.
Thank you very much for that. And let's talk about the mutual fund data, which is out for the month of November. Equity inflows saw a steady pickup, driven largely by flexi-cap funds. Large-cap inflows remain subdued. SIP contribution continued to remain steady and strong. The industry's total assets under management have now risen to 80 lakh crore. Subi joins in with the details.
Well, it's been a steady showing by the mutual fund industry in the month of November. There's actually a nice pickup, almost a 20% month-on-month pickup in equity flows. So equity flows are now trending closer to 29,900 crores, almost rounded off. Now, where is the bulk of this equity money coming in from? It's actually coming in from flexi-cap funds, because if you see the large-cap category, it remains very subdued. Large-cap funds are not the top choice of investors, so to speak, because you've got only about 1,600 crores worth of flows coming in there. Small and mid-cap funds, fairly okay, about 4,400 crores. crores each in these categories, but it's the flexi cap category. Again, it's pulled in about 8,000 crores this time around. So that's the equity story. The other big, positive point is that SIPs are rock steady. There's no change over there. Once again, the SIP inflows for the month are coming close to about 29,500 crores. So more or less similar to last month's levels. No let up in SIP flows. The lack of NFO activity is really telling, and that's because of subdued market sentiment. We've hardly had any big-ticket NFOs this time around. Let me quickly wrap up the numbers. So all put together, 24 new fund offerings, and they have pulled in, very modest 3,100 odd crores, which is half of what they pulled in last time. Last time we at least had 6,000 crores from NFOs coming in. So the NFO party is, pretty much it has fizzled out. Let's see where else the money is going. The trend of investors moving to hybrid funds, that remains. There's a slight month-on-month dip, but hybrid funds have again pulled in close to 13,300 crores, which is not a bad number at all. It's very, very healthy. And a lot of this money, again, going into the multi-asset allocation category, which is something the industry has been pushing for. Again, MAFs, as they're called, they've pulled in over 5,000 crores. By the way, there's a little bit of a let-up in the gold ETF frenzy. Gold ETFs, as gold prices were scaling all-time highs, they pulled in close to 8,000 crores at an average over the last 2 months. But in the month of November, that number has come down to less than 4,000 crores, closer to about 3,700 crores. Last but not the least, the overall industry AUM, MF industry AUM has crossed another milestone. Now total assets managed by the mutual fund industry are in excess of 80 lakh crore rupees. So steady showing and some pickup in equity flows, along with sustained flows coming into the multi-asset category.
Okay, all right, Surbhi, thanks very much. So that is what took place in the mutual funds. But to take this discussion forward, we have with us Somil Mehta of Mirae Asset Sharekhan and market expert Ambrish Baliga joining in. Somil as well as Ambrish, thank you very much for taking the time out and speaking with us. Well, Ambrish, I'm going to start with you. The SIP inflows largely, you would have to say, remain stable, just about a marginal dip on a month-on-month basis. What's your sense, about flows possibly going into December, considering that it is holiday time, as well as the fact that, the rupee has been depreciating at this point?
No, typically the way the markets have been moving, I expected the flows to slow down, but then clearly this is showing that investors are still very confident on the markets. Especially the small cap and the mid cap side of it, because if you look at the flows there, mid cap, small cap, as well as flexi cap, all put together is about 16,000 crores plus. And if you look at the large and mid cap fund, again, 4,500 crores there. So clearly, I think people are still quite bullish on the mid and small cap side of the market, and that's quite positive. The way I would see it, and I expect these flows to continue. If it had to stop, it would have stopped possibly in November, which it has not. So I think these flows will continue, irrespective of where the rupee is.
Somil, today's rebound from levels of 25,700 to 25,900, is this just a dead cat short covering bounce, or do you see more legs to this rally? How does it play out over the next couple of days?
Good afternoon to everyone. Absolutely positive on the markets. Medium term still remains positive, and I'm expecting markets to continue this rally. On the upside, targets would be well above 26,300 in the short term. In the medium term, 26,700, 800. But markets have taken support at lower end of the Bollinger Band on the daily charts and 40 daily moving average, which is a very good sign. In the last couple of weeks, we have completed a ABC corrective on the daily charts, and now the corrective pattern has completed. I think from here, it's a buy on decline strategy, and today's low becomes extremely crucial. That is 25,693. So that level becomes very crucial. Same for Bank Nifty. Bank Nifty has been trading in a very small range, forming a triangle pattern. I think this triangle pattern should break on the upside. Crucial support around 58,780, and targets would be well above 60,200, 300 levels.
Okay, all right. Well, that's on the markets. But the entire CDMO space was in focus because the US House of Representatives has passed the National Defense Authorization Act, which basically contains the Biosecure Act. Now, the bill will proceed to the Senate for consideration and is expected to possibly see a vote next week. Now, the US Biosecure Act, according to Macquarie, will possibly be enacted into law by end of 2025. According to them, the Indian CDMO market is worth around $7 billion at this point in time. It could go to around $20 billion by the end of this decade. The incremental projects resulting from the Biosecure Act is expected to add to the revenue going forward, possibly with a lag of around 18 to 24 months, according to Macquarie. They've reiterated their outperform on CDMO coverage companies. They prefer stocks such as Divi's as well as Syngene at this point. Now, we did speak to Sci Life earlier, and they've said that CDMOs who were waiting for final confirmation will now start acting on this Biosecure Act. They are engaged in significant strategic conversations, and meaningful numbers will take some time to see. So that's on the entire Biosecure Act. But Amrish, just wanted your thoughts. Would you be a buyer into a couple of these stocks, say Piramal Pharma as well as Laurus Labs, Divi's, Syngene, Blue Jet Healthcare, any of them that get your fancy?
No, surely. I mean, I would be a buyer in these, especially a stock like Gland Pharma, which I've been recommending. The other one, I mean, Akums, which has corrected. I think that's also a decent buy at the current levels. And the third one would be surely be Syngene.
Okay, moving on to the other big story today, and that is on Ola Electric. Now, S&P downgraded Ola Electric's parent, ANI Tech, on account of continued cash burn, weakening liquidity, and growing risk of a covenant breach. But the stock moved up nearly about 7%. But to keep that in context, remember it was down 60% since the start of the year. Ritu joins in with the details.
Well, after Moody's downgrade last month, now S&P Global Ratings has also downgraded ANI Technologies, which is the parent company of Ola Caps. Now, S&P has lowered the company's issuer credit rating from CCC+ to CCC- with a negative outlook. This, they say, reflects weakening liquidity and the risk of a financial covenant breach in the next 6 months. Now, S&P warns ANI's cash and equivalents are expected to fall below 200 crore rupees in the fourth quarter of this fiscal. And this is critical because ANI is required to maintain 40% of its term loan be in cash, which amounts to 240 crore rupees. Now, S&P expects that they will likely breach this covenant when it is tested on the 31st of March next year. Operating losses also continue to weigh on them. S&P projects that ANI's adjusted EBITDA loss will rise to 590 crore rupees in this fiscal, and revenue could decline by 25 to 27%. At the same time, its market share in India's four-wheeler segment has fallen to 20 to 25%, which is down from more than 50% just 2 years ago. Now, the agency notes that ANI Technologies also has limited ability to withstand continued cash burn without additional capital infusion, unlike its competitor, say Uber, which holds more than $6 billion in cash. So S&P notes ANI's options to increase liquidity, they too are limited. It has historically relied on equity funding, and there's limited record of bank financing. ANI also, keep in mind, holds a 3.6% stake in the listed entity Ola Electric, which is now valued at around 450 crore rupees after taxes. But selling that stake is also complicated by the fact that Ola Electric shares have been trading at an all-time low. Meanwhile, ANI has delayed its IPO plans repeatedly as well, and they hold nearly 19,500 crore rupees in compulsorily convertible preference shares, which represents about 95% of the adjusted debt. And S&P says if the IPO deadlines are not extended, the preference shareholders could exercise their exit rights, and that will add immediate financial pressure on the company.
Thank you very much for that. Quite the fall on Ola Electric. The issue price was 76, and the stock is now more than half compared to the issue price. So I'm not sure if you look at Ola Electric, but if you do have, give us a trade. And any other stocks that you have on your radar that look interesting to you. For instance, a lot of capital market plays saw a lot of upward momentum.
Ola Electric overall looks negative to me. Lower top, low bottom formation. I'm not very excited on this, so I would say avoid at this point of time. Maybe the breakout would be around 43, 44 levels. Once it closes above 43, 44 levels, I will probably revisit this. But at this point of time, avoid. On my list, I have two stocks. One is Manappuram, and Manappuram has been consolidating in a very broad range. I think this broad range is ready to break out on the upside. Momentum indicators have given a buy signal, so great stock to be in. Stop loss would be 275 and target would be 300. The second stock I have is DLF. It's I'm trying to catch the reversal here, preempting a breakout on the upside. DLF is forming a small inverted head and shoulder pattern on the hourly charts. Momentum indicators are very oversold. 61% retracement completed of the previous rally. So stop loss should be 678 and the target would be 740.
Okay, all right, Somil, as well as Ambrish, thank you very much for joining in and taking us through the market setup and what took place in today's trading session. Well, we need to take a short break on that note, but we'll get you all of the top corporate voices along with the key market events to watch out for on the other side. Stay tuned.
"26 years of CNBC-TV18. "26 years of CNBC-TV18.
Welcome back. Shares of Tata Steel jumped nearly 2.5% after the company unveiled a bold and wide-ranging capital expenditure roadmap. The company will scale up capacity at its subsidiary NINL by 4.8 million tons per annum in phase 1, taking the total capacity to 5.8 metric tons. This will be followed by a 2.5 million ton thin slab caster and rolling mill in Odisha. The company is also strengthening its downstream presence by establishing nearly a 1 million ton hot roll pickling and galvanizing line in Maharashtra.
Tata Consultancy Services, or TCS, has signed an agreement to acquire US-based Coastal Cloud for an all-cash offer of $700 million. This deal is expected to significantly strengthen TCS's global sales force and AI-led transformation capabilities. The deal is expected to be completed by Jan 31st. The deal is TCS's biggest buyout since its 2004 listing and comes as the company steps up its inorganic push.
Shares of Hindustan Zinc have now extended gains for the third straight day. The stock is up nearly 9% in this period. The rally comes on the back of a sharp rise in silver prices, which hit all-time levels of more than $62 per ounce. And remember, the Federal Reserve cut yesterday also supported sentiment on the stock.
Well, we told you first, and now it's official. India's pension regulator has allowed national pension system funds to add gold and silver ETFs along with several other assets. These changes apply to both the government and non-government sector schemes. Funds can also invest into stocks on the Nifty 250 and BSE 250 indices instead of just the top 200 listed companies.
And on to the top corporate voices then of the day. Nestle India says the next 20,000 crore rupees in revenues will come much faster than earlier. Speaking to CNBC-TV18, the management also said 2026 is looking strong. Margins will be in the range of 22 to 24%. Nespresso and B2B verticals are projected to grow 2 to 3 times faster.
Poly Medicure expects a 22 to 25% more growth in the second half of this fiscal versus the first half. Managing Director Himanshu Bed said that international sales have been impacted by Chinese dumping, but exports are expected to bounce back in FY27.
The CFO of Birla Corp, Aditya Saraugi, said that demand in the cement sector has remained sluggish through the months of October and November. He expects industry growth in Q3 to remain flat to low single digits. And despite the subdued trend, Birla Corp anticipates ending the year with an overall volume growth of 4 to 5%.
All right, and before we wrap, we'll bring you some key markets to events to watch out for. Upasna standing by with the key events to focus on for tomorrow's trading session. Upasna.
Well, first up, let us look at the global economic cues coming to UK first. The GDP and the balance of trade data will be out. Back home in India, CPI data will be watching out for there for the month of November. And bank loan and deposit growth data will be also out tomorrow. Now, let us look at the key stocks that will be on our radar tomorrow. On the back of corporate action, Mrs. Bector Food Speciality stock split here from 10 rupees to 2 rupees. Bharat Rasayan bonus issue in the ratio 1:1 and also stock split from 10 to 5 rupees. NACL Industries will also be in focus as the stock will trade ex-date for its 250 crore right issue of equity shares, and stocks like JSW Energy and Krishna Diagnostics will also be in focus as board will consider the fundraising plans here. Now let us look at the IPO development. Now first up, the ICICI Prudential AMC 10,600 crore issue opens for subscription tomorrow, while on the flip side, Nephrocare Health Services and Park MediWorld closes for subscription. Now let us look at some of the other events. Now we'll be also tracking any development in US-India trade talks, and also defense ministers of Germany, France and Spain will be meeting in Berlin tomorrow, so we'll be keeping an eye out on that as well. So all in all, looks like quite a power-packed day tomorrow.
Thank you. And that brings us to a close of this edition of Markets Forward. Don't go anywhere. We'll be back with more news and updates.
"26 years of CNBC TV18.